Hi, folks. This is Lee with the Market Sense for the week of January 5th, 2021. It's a new year. The charts in this presentation come from the Trade Navigator software, which I wouldn't know how to do my job without. And we're looking at a weekly bond market chart here, and it looks sideways. I'll bet you've never heard that before. Actually, you've heard that since last March because that's all they've done. We could probably look at above 173.24 or let's call it below 170.16 as constituting some form of breakout, possibly a directional move, although, boy, you'd think a directional move would almost certainly have to be lower, not higher, but still, above 173.24, below 170.16. Not sure how much that really means because that move in March that started this whole congestion sideways period had a high of, in this contract, 189.18 and a low of about 165. So until they take out those areas, they're still kind of sideways. But, as tight as this is, you'd have to look that a move out might continue for a little while. And, with the Fed artificially holding interest rates down, you'd have to believe the move would be lower. I mean, how can they go up when they're already almost at zero interest rate wise? They'd almost have to go down. That's a dangerous way to think, though. So if they're above 173.24, you have to think maybe they're going higher. And if they're below 170.16, maybe they're going lower. But remember, even if they do, they're still sideways. Looking at stocks, boy, this was interesting. They had an amazing rally basically in the last hour before the holiday last week, and then they were at new all-time highs Sunday night and kind of came crashing down Monday morning. The low that you see here on this chart actually occurred about 1:30 Monday afternoon, and they've been going back up since then. I'm not sure either of these moves really mean anything. I mean, you kind of can't be a technical analyst. You got to be a analyst of the virus, and who knows what that's going to work out to be. They've got resistance, not really resistance, but a target up here at 37.75, which they didn't quite reach Sunday night, just missed it by a couple points. And then they broke down through a bunch of stuff, but the next level down here is 36.36, and they haven't gotten to that yet, though they look like they can. As scary as this move Monday might be, I want to give you a big picture thing. I don't do this very often, but it's a new year. So here is a yearly S&P chart. And you can see the highest support we could possibly find is the upper moving average here, and that's below 3,300. So how far down could they go? Well, a long ways, and they still wouldn't look bad. Now, they don't have to get down that low. They don't always get down. I mean, we can see examples here where they did not get down to even the moving average of the highs, stayed above that the whole year. In fact, you can go back here during the Obama administration, there were 4 years in a row where they never traded down to the moving average of the highs. That ought to tell you stocks do go up during Democratic administrations too. But, whether they'll get down here or not, I don't know. But for perspective, you need to understand that that's a long ways down, and it still wouldn't change much in the overall big picture of this market. Still a very strong market. And I will repeat, they were new all-time highs Sunday night. So don't be in a hurry to kill this market. They could turn down from here. Just don't get too jumpy on it. We also look at the QQQ to represent the NASDAQ, and it's got a similar situation. If they were higher early Monday, they actually came down. This upper level here is, I think it's 316.32 or 315.50. Either way, they didn't quite get to it. But the lower end here is 305.66. That's the lower moving average, and I believe they actually got to 305.18. So it's possible that they found the low for the week already. And if you had to guess if either the high or low has been made, it kind of looks more likely that the low has been made, even though both of them could be. But, could they go up? Yeah, I think they could. I don't know what kind of news it would take either from the elections or the Electoral College or the virus to get them to go up. But stranger things have happened. I'm kind of gun shy about the stock market in general until after Martin Luther King Day. It's no real technical analyst there. It's just a personal thing. I've found them a little squirrely for the first couple weeks of the year. It's like people are trying to get their feet wet and reestablish stuff. And I kind of like to wait till after that holiday on that Monday where we stay closed for MLK Day. I kind of wait till after that before I feel like I get any sense of what they're doing. So I apologize for being a little out of it in that regard. But again, I think support might have come in already in the NASDAQ. And in stocks, don't let the sell-off scare you. Nothing's been broken of any substance yet. So that's what we've got for you today. I hope you can find something profitable to get yourself into, and thanks for checking in to see how we're looking at things.